Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and ho-hum kind of a performance from the US markets, if you will. You could argue that it was a bit of a recovery from the Dow, as a result of which, while the Nasdaq stayed in the red, and when the US market chart comes up on your screen, you might look a deep gash of red because of the Nasdaq, which is the top line, and therefore you see that 189 points downtick. And yes, it is not all that great, but the Dow, flattish kind of a close, and the US futures are trading marginally in the green. So keep that at the back of your mind. However, as a result of this continuous downtick that we've seen in the last few days, Asia is a bunch of Asian indices are now in the bear market territory. There's this chart on the Bloomberg terminal which shows how, if you look at various Asian markets, the sell-off is so deep that some of the markets have fallen into either the bear market territory or the correction territory. Correction is sub 10%, bear market sub 20% in a single line, so to say. So a bunch of markets are in the bear market territory, a bunch of markets in the correction territory, and this includes the likes of Kospi as well, for example. However, this morning there's a bit of a bounce in some of them. So Kospi, for example, is up about 1%. Some of the others are doing well. Asia will come up on your screen next. It's a mixed morning for the Asian indices. That's the limited point I'm trying to make. With markets like Kospi doing very well and up about 1%. There is ASX, which is up about a couple of percentage points. The Chinese market's okay in the red. So it's a mixed bag, but I would suspect that the largely a tick of green as we wrap up the week and bring up the SGX Nifty next on your screen. That's the only index I haven't seen this morning. Let's just see what it is doing like in the session today, or what is it indicating for how we'll start off in the session today. Well, about a 18-point downtick or a 40-point downtick, whichever way you look at it. I mean, so it's roughly around a flattish start that we anticipate if the SGX Nifty is to be believed. Quick check on the MOV function. It's pertinent simply because it was a normal day yesterday. Everything ended in the red, though you could argue that there's a bit of a recovery in the second half, and which is why it'll be interesting to look at where the pulls and pressures were for the broader end of the spectrum in the markets yesterday. Remember, both the mid caps and the small cap indices also ended in the red, and which is why the market breadth, as you see, 188 advances to 313 declines. The market breadth was not positive, but a bunch of individual names did well, right? TV18 broadcast on this whole talk of Rupert Murdoch based company looking to buy stake. Remember, we spoke about this yesterday. That stock was active. There was some Sharda Crop came good results, and that stock was active. Team Lee's good results, that stock was active. RBL Bank ahead of the numbers was a very active, and I'll talk about that. Surprisingly, came out with a good set of numbers, at least better than estimates, and which is why maybe that stock did what it was doing. On the other hand, Torrent Pharma, the big boogie on the numbers, and that stock corrected, as did India or Intermesh, by the way, down about 8-9%. COFORGE ahead of the numbers kind of slipped quite significantly. Jubilant Foodworks, on which there's a tactical buy from Morgan Stanley, that one slipped in trade yesterday, but there's a tactical buy. And India's real estate, not the best of numbers, so that was a bit of a problem as well in trade yesterday. Now, what's the trade setup therefore looking like for trade today, right? So I believe, I mean, at least to my mind, the screen is not showing the strength except some minor reversals from intraday levels. So, or are we kind of looking at a phase wherein everything will look like bouncing back? At least I can't see the screen showing that promise as yet. Could it happen? Sure, it could happen, right? Who's to say? I'm completely wrong in my judgment, but I somehow don't think the screen is quite showing that strength. Maybe one of the reasons is that because IT, despite the valuation significantly off from the highs, is not seeing buying. I was looking at some numbers yesterday. Wipro is down 24% from its highs. HCL Tech, I think some 17% or thereabouts from its highs. Infosys has corrected quite significantly, about 13 or 14% from its highs as well. So there's a bit of a corrective move. Yeah, Virat Naik, so that look at this last 1 month, the Nifty IT is down about 12%. Mindtree, Wipro, COFORGE, LNT, LTI, Tech Mahindra. It's been a series of stocks which have corrected quite a bit, but they are not seen buying. I think this could probably be one reason as well. While the index doesn't come back because banks are okay, banks are showing promise, but IT is not. That's the problem. Uh, let's see. And the other thing, Rios, from a trading perspective, do watch out. Fair degree of short buildup is happening in stocks which are coming out with slightly disappointing set of numbers. We've seen that not just yesterday, but over the last few years. Like HCL Tech Prime example, right? Good numbers but margin disappointment, fair degree of shorts. Wipro, poor numbers, fair degree of shorts getting created, and these shorts are lasting. So keep that at the back of your mind. Don't go out and think that, oh, because the dip is to be bought into, stock has corrected 12, 13, 14% post its numbers, it will get bought into. It is not getting bought into. That's the slight difference that we see in this earnings versus the last earnings. So in light of all of this, what are the stocks that one should monitor for the session today? Well, I think the stock of the day could be Dalmia Bharat. Not the best of numbers, and could have a bit of a reaction in the session. Viewers, keep in mind that the trend doesn't seem to be all that positive. Yesterday, the CBDT income tax refunds news also failed to lift sentiment. The FNO segment turnover was the highest yesterday. So stocks are not quite getting that fervor, and which is why Dalmia Bharat, I think, could well be the stock of the day. No, let's stick with Dalmia Bharat. Revenues at 2731 crores versus 2737 crores. Margins came down on 1,000 basis points, 15% versus 25%. And and the net profit was down, of course, 48%. Now, two things. One, the realization was up 2% YY, but was well below estimates. And it didn't kind of rise in line with cost rise. And as a result of which, the margins got really punctured. And this is, I mean, this is very similar to Ramco's 3Q performance as well. Realization was down 5% QOQ for both the companies. That's the problem. Realization miss, cost uptick, margins get punctured, and therefore the bottom line performance doesn't look all that great. So Ramco could well have a spot of bother in the session. I know some of these stocks have reacted quite a bit, but I do suspect that these numbers don't inspire much confidence. RBL Bank, on the other hand, did reasonably well compared to Bloomberg estimates and compared to quarter on quarter. So the profit after tax was up at 156 crores. The estimates were 75 crores at the Bloomberg end. But the asset quality, viewers, uh, quarter on quarter, 4.84% versus 5.4, net NPA 1.85 versus 2.14, a bunch of other parameters. RBL did reasonably okay. So for a bank which was not expected to do much, and expected to actually not do well, RBL has given a bit of a surprise. Let's wait and watch if there's some traction there. COFORGE, like I said, corrected out of the numbers, but I just thought a couple of points that I thought were interesting and I should bring. The new deal TCV was down 13% quarter on quarter for COFORGE. And while that was bad, the FY22 organic constant currency revenue growth guidance was revised to 37% from 35% earlier. So just thought those couple of filters that all of you would have seen these numbers yesterday for COFORGE, but just a couple of things which kind of stood out on those numbers I thought I should bring to you. At the other hand, Birlasoft, I thought the numbers were very good. Revenues were up 6% at 1,071 crores versus 1,011. EBIT margins at 13.44% versus 13.09%. So very commendable performance in a quarter when most companies have had issues with regards to wage hikes, except a few. And the PAT up about 10% at 113 or 114 crores versus 103 crores. So good numbers. Just keep in mind their Q2 wasn't the strongest. So they did have a very strong base, so to say. But despite that, a decent performance you have to agree, you have to admit. In the stars, decent performance too. Revenue is up 71%, margins expanded, net profit up 60%. Couldn't find too many faults with these numbers. And then the other one is BHEL. I never know how to read BHEL's numbers, so I'm not going to make an attempt to tell you whether it's good, bad, ugly. Just telling you that the revenues were up 15%. There's an EBITDA gain versus an EBITDA loss and a net profit versus a net loss. But I've always failed to figure out whether BHEL's numbers mean that the stock has turned around the corner or not quite. It's just, it's a beast that is too difficult for me to analyze, really. Some of the PSUs they don't quite give a confidence of a trend, so rather stay away from analyzing them. What looked okay though was LIC Housing Finance and Root Mobile. Both of those did okay. But Mapma India, much fancied stock. Somehow CE Infosystems disappointed a little bit. So watch out for those three names as well. So LIC Housing Finance, haven't given those numbers, but LIC Housing Finance, Root Mobile, decent numbers. Mapma India, not so much. Lastly, some stocks in focus because of news or because of results and a mix really. IDFC. There's a media report of three suitors lining up for some stake in IDFC AMC or taking over IDFC AMC, and therefore a merger process. So lots of stories around IDFC Bank, and whether this is clearing the decks for the eventual merger, so on and so forth. Maybe IDFC reacts today. Keep in mind, if it does, you might just want to Google the news about IDFC so that you know whether you want to take some positions there or trades there or whatever. And Nippon Life, just including the numbers because the numbers look good. And I thought compared to some of the others that have come out, Nippon Life showed reasonably okay revenue and EBITDA performance. The bottom line performance, not so much, but revenue and EBITDA, the two factors which matter quite a bit, reasonably okay. TVS Motors, they did a press conference yesterday. They acquired 75% stake in Swiss e-mobility group. The point is, viewers, month after month, TVS is showing, actually all the incumbents are now, but TVS is certainly showing a lot of focus and impetus towards e-mobility and electric vehicles. So maybe the market likes that. And Mastech, which came out with a really bad performance per se compared to the peers, a fairly lackluster growth performance from Mastech, but the promoter and director Rashang Desai bought about 4,000 shares between January 24th and 25th. So this is one more stock that you should definitely keep in mind. Is there something else? Let me just try and figure out if I missed out on something. Remember, CLSA came with a note on Fino Payments Bank yesterday. I thought those numbers were okay. Transport Corporation of India looked okay. The margins expanded about 300 basis points. KEI Industries was flattish. Mahindra Logistics was weak, so that's one set of numbers that you might want to uh, look at it. Maybe the stock reacts a little bit, and PNB asset quality improved a little bit, so do watch out for that one as well. I'll just take a minute here and try and read out a couple of other things which people should keep an eye out for. Um, yeah, I mean, though that's it in terms of numbers. Maybe I missed a number or two here and there, but I think broadly that's it in terms of numbers. Post the con call of SRF, UBS has raised the target price out there to 3,100. They're saying that the management expects Q4 to be better than Q3, which was the best quarter in terms of profitability. So can SRF from the specialty chemical space bring a surprise or two? So that is something that people should consider well. KPR Mills will consider a buyback on Feb 7th, so that is something also that people should keep in mind. Well, viewers, trade safe, maybe a bit better day than some of the others. Could we show a bounce? Maybe we could. Is it showing promise? Not as of now. To my mind, the high frequency indicators and the quant indicators still don't promise a big bang leverage contrarian trade on the upside. Can that change today? Sure, it could. For now, still believe people should be careful while trading. Don't believe that this is a dip that necessarily will get bought into. We have a couple of big events in the terms of the budget and the UP elections, so be mindful of that. Thanks so much for tuning in. Have a safe, profitable day ahead.